Hi guys, welcome to the Market Code Breakers. My name is Leon and I break down one asset for you, giving the key levels that the banks and institutions are going to use going into tomorrow's session. And my God, what a week it has been. I don't want to say it, guys, but 3 for 3 so far this week. Take a look back at all the videos that I've posted this week. I'll leave a link in the description to yesterday's video. But so far it's been 3 for 3. The Nasdaq I started with on Sunday going into Monday's session. I said this is the area where I'm expecting to see a reaction from. We got that reaction and it was the trade of the day. Absolutely beautiful. Could have netted yourself 900 ticks on that on the Nasdaq. And then I broke down oil for you going into Tuesday. And my God, oil was so beautiful and so precise and so perfect. I said it's going to react, it's likely to react at this level. If you get that reaction, be running along from there, and then the highest point it's going to react from again. So you would have got the best possible entry and the best possible exit. You would have got the high of the, you'd have taken the low of the day to the high of the day based on what I said to you. You could have also run the short from that area as well, which I didn't talk about in that video. And then yesterday, going into the FOMC, going into the election day today, I said if the the S&P wants to move up, it's probably going to react from this point. So mark it off on your charts. And what did it do? It reacted to that from that point to pretty much precisely the tick. So I'm going to show you what I said to you yesterday, and I'm going to show you what happened in the S&P. But I'm sure you're aware of what happened in the S&P and the Nasdaq. Everything just flew up today. And that's what you expect really if on an election day, volatility comes into the market. I'm a little bit gutted I didn't get to trade the S&P. Like I said, I was a little bit busy. I was setting up this new desk and I missed that trade opportunity. And then by the time I got the desk set up and everything moved around, I looked back at my charts and it had already raced up 200 ticks. And I thought, well, I'm too late now. I didn't trust it. I didn't want to chance my luck by taking a long when it was already up so far. But anyway, yeah, it's been a fantastic week for all the levels that I've brought to you. So I want to break down the Nasdaq going into tomorrow's session, give you some key levels to take forward, and I want to review what happened with the S&P based on what I said yesterday. So let's get into it, guys. So this is the Nasdaq. These are some key levels that I want you to take away going into tomorrow's session. But before I get into that, I want to show you the S&P, and we're in a range up here where I don't have much to work with. But let that not put you off, because what did I say yesterday? Where was we? Yep, I said, so we were talking about them working this blue range yesterday, and I said if they want to move higher, they want to prove that they want to go higher, they're going to react from the top of this blue range. And that's exactly what they did. And look at the precision, guys. This is on the 1 minute chart. We're talking 4 ticks, 2 tick, 1 tick at that point, 4 ticks at that point. That was the level of the accuracy that you got in the S&P going into from yesterday's setup going into today's session. And then by the time I turned my computer back on, the S&P was up in this region, and I was like, yeah, nah, I don't want to do anything with that now. It's made the move. But look, before you knew it, literally before you knew it, from the hours of midnight where I am to 3:12, 3 hours, and you would have net yourself 300 ticks on the S&P like that. 300 ticks on the S&P on any day is huge. But to get it specifically from what I said would happen, again, 3 for 3 this week. The call outs have just been phenomenal. So yeah, I mean, going into tomorrow on the S&P, we've got the FOMC. We are at all-time highs. There's not a lot I can work with up here, guys. There really isn't. There's not a lot of information that I can give you up here with the all-time highs on the S&P. But what I can work with is the Nasdaq. So I want to very quickly break that down for you. So once we get above this blue range is going to be key going into the Asia session. So make sure that you mark this off. Okay. So I'm going to show you how to do it again. So what you need is the Fibonacci tool, and you want to get the highs, the lows, and the midpoint. So you set the Fibonacci tool, you go to you start at the 20,918 and the lows of 20,822, and on your Fibonacci you want 0 clicked, 0.5 clicked on 1 clicked. You want extend lines right, and you want the background to be highlighted so you can clearly see that going forward into tomorrow's session. Okay, so I want you to mark off those. I want you to mark off that range, and then the next point down because this also might become important in tomorrow's session. I want you to mark another range off, and that's going to go from 20,806 to 20,643. Okay, and make sure you've got the midpoints on both of these two ranges, and these are going to give us two ranges that we're going to be able to work with going into tomorrow's session. Now, personally, what I expect to see in the Asia session tomorrow on the Nasdaq is, listen, if they want to continue the move, then what I'm expecting to see, they'll come back down and they will react from one of these points. They could either come down to the midpoint and react, but they could also, don't get it twisted, to react from the midpoint. Now, they're going to keep climbing up. That's not what I'm saying. But these is going to give you points that you can work with in the Asia session. So you'd be well to take trades from the midpoint to the highs. You'd be taking the highs to the midpoints. You might even get, if it comes back down to lows, give you a good reaction. You might be good to ride that up to the highs again. So these are just key areas where you will most likely get reactions from in the Nasdaq in the Asia session. So just pay attention to these areas, guys. What I'm expecting is a lot of range-bound action going into the FOMC, okay? But this is the range. If they're going to play a range, this will be the range that they're going to play in the S&P. The other in the Nasdaq, sorry. But the other thing that could happen is they could break down into this lower range. Like, don't get it twisted. They could break down into the lower range and start playing this lower range. So I've give you the first range, but there's another range which I've got highlighted here in orange, which I think you should also pay attention to, because you might get a reaction from the highs of this. It could actually break down. It could actually start playing. When I say playing a range, what I mean is you will start to see this type of behavior from the mids to the highs, back to the mids, back to the highs, to the lows, back to the mids, to the lows, back to the highs. You'll start to see that type of behavior. So mark off these areas, guys, and you will see some reactions tomorrow. I'm confident that you will see reactions at these points. And just be cautious with it. Just take your time with it. Just say, are they definitely playing this range? You know, have they confirmed that they work? Have they confirmed from the midpoint to the highs, and have they started working their way back down again? You might be okay at that point to take a trade then from the highs back to the midpoint, which would net you around, well, it's a good 160 ticks even if you with a slightly late entry. Just be careful with it, guys, because we have got a lot of volatility, FOMC and election day. So, you know, the price could keep climbing. But I'm expecting if they do want to climb, what I'm expecting to see, the same that I said with the S&P yesterday, is they broke above it. I expect them to retrace to it and then continue to prove the move. But before that happens, you know, we could get the breakdown. We could get breakdown into this area, back to the highs, back to the lows, back to the mids. Then we could start working into these ranges, you know, start bouncing around in these ranges. But if you've got all these places marked off on your charts, it'll give you a good setup going into tomorrow's session. So, yeah, I mean, it was a very quick video. That's all really I've got to say for the Nasdaq. But my God, what a week it has been. I'm so happy that... I'm so happy that every information that I've given you has played out so perfectly so far. But yeah, it's just been a phenomenal week so far, and it's not over yet, guys. But FOMC, it might get very tricky. But unfortunately, I won't be able to give you an update as we're going into FOMC. I have other things that I need to do tomorrow night, so I might not be able to post a video on time tomorrow night. But I'll be back with another video on Friday. No, I won't need to do one on Friday because I miss Friday out and I do Sunday. Because what's the point of me doing a video on Friday when Sunday is when the market opens? So I'll do a video before market open on Sunday, giving you key areas to look forward to going into next week, any potential setups, any potential bigger, longer time frame plays like swing trade opportunities, anything that I'm seeing that are building up in that respect. But yeah, what a day. Like, it's been an absolutely crazy day. They say, you know, if you're monitoring the S&P and you're monitoring the Nasdaq, if you took that trade on the Nasdaq based on the behavior that you were seeing on the S&P, based on the setup that I gave you yesterday, and you actually had the cojones to hold it, the price action was in this region. If you had the cojones to hold on to that, based on the setup that I gave you in the S&P, you would have been handsomely rewarded with 2,300 ticks. Like, what a day. Crazy day. Anyway, that is the key levels that you need to take forward for the Nasdaq going into tomorrow's session. Everything else is, yeah, I've already given you everything else for the week so far, and everything I've told you has been perfect. let's just quickly just check on how oil has gotten on since I look at that. I mean, the same levels, guys, the same levels. I spoke about this yellow range, this much bigger yellow range. I spoke about this high point here. Again, you would have been able to take a short from this to the lows of this red range. This blue range did come into play, but also this bigger yellow range was being confirmed. So, you know, we hit the, I'll show you what I mean. We hit the highs, we reacted from the highs. We went back to the lows, to the mids, to the lows, back to the mids, broke below the lows. But then when we came back up, we shifted out and we quite cleared the midpoint of that red range, back to the lows again. So lots of key areas still from the same levels that I give you early in the week, guys. Like these levels, they don't go away, you know. These are useful levels. These are the levels that the banks institutions work with. And again, you can see it clear as day on oil. You can see it absolutely clear as day on oil. So these levels are not random, guys. These are the levels and the ranges that the banks institutions use. You need to think about price in terms of ranges and in terms of levels, because everything else is just noise. It's all traps. These are where you want to be placing your orders. This is how you want to be trading. You want to adopt these levels into your trading, and you will see the benefit of them over time. Even just the last 3 videos, guys, go and check them out. The proof is in the pudding with these levels. So make sure you're paying attention to the levels that I give out. You will get opportunities from them, and I will see you guys tomorrow. Bye for now.